Hello, welcome to another video stream of ES Futures Trading. Today is Thursday, July 13. It is 8:21 a.m. in the morning. I'm having this earlier today because we have PPI in 10 more minutes, and I wanted to show you something from yesterday here. Before I do that, I guess I need to update this. This is recap. Okay. The market is coming from CPI yesterday. Market was in range. We have this range inside the range, and which is a form of balance. This will have 20-day range here, everything here, and the market was at kind of pretty much at the center of this range. And notice how we have another range here, 1, 2, 3, 4-day range here, before CPI. The highs here, how far is the market from the 50? You want to make it look steeper, you can make it this. No, it's kind of far from the major moving averages. The market was being bought from the 50s, multiple times from the 50s here, 1, 2, 3 times was bought from the 50s. A gap here, 100, 200, multiple lows here. Firecracker effect potential here, gap here. This is not a gap. Was in perfect balance. After the number, the market took this, highs out, firecracker effect potential here. Once this the thing is, now that these highs have been taken, it's going to have upside continuation. Something positive for this movement was there's volume actually in this market, volume here, high volume. But I question the volume. This is one trade, right? This is one trade. That what the trade is just to take this stop loss. Take this high out. This is a range. Take a higher range out. Now, continuation. We see the market taking the 4,500 and 4,600 in the upper side. It happens to be that these ones are the 45 and the 46 are not just century numbers, but are also reference from the past, very far in the back, very far in the back. Now, I have to be alert for this movement to be just a look above. Okay, I don't want this market to come back inside this range, because if that happens, what can happen here is we can have a trade to the opposite side of this range. Okay, that's why I am keeping this monthly high here. Okay, this is the 4,400. There was heavy buying in this level, which is an indication also that this is not big, serious money. It's just trading money here. We have the overnight inventory that is 100% short. 100% long here. Overnight inventory 100% long. The trade yesterday was super mechanical. Very short-term trading yesterday, all day long. Notice how the market, when the market opened, just right away it starts half back here. The next one, this period, if you remember this period, C was also half back. Okay, when we were talking about the loans we had yesterday, that first having a gap this big was hard, right? It was hard. The odds were low for this gap to be closed in the first attempt. You know, the market made an attempt to close the gap. Okay, but the thing is here, when you have a longs here, when you have your long here, value was going to be higher. You know, when you were waiting or looking for is a trade to the upside, right? But once you have your long in this area, we were talking somewhere in here when the market first started to close the gap, fail. Now you got the long here, but the market just stalled here. You know, there were multiple signs. There were multiple signs the market was giving us that this upside movement was kind of problematic. It was getting, you know, some issues. And what followed was a break. Okay? Was a break. That was also very mechanical in some part. You have a liquidation here of this short inventory and new buying coming from. You know, I question this thing. You know, where this buying is coming from? From the breakout level. The second time the market is bought from the same level. Next time bought from the 4,500, the rally follows. Notice this high here. You know, 1, 2, 3 high. 3 times when market was sold from this. The same level in the upper side. Same level. And was bought from the 4,500 exactly. So this is very, for me, it's just very mechanical. And the market ended. And look at this as well. Where L is coming from? Half back of this period here, which has, I mean, if I want to be short in this market, why I would, why? The question then, if you were thinking in the short side, why were you short in the market? First, it has value to the upper side. Okay. And very mechanical also. I mean, there was after this trade and the liquidation that followed, there was nothing here. There was nothing in this market. Now the inventory is 100% long. Again, notice where the base is. 7 was bought from last couple times. The market opening up here corrects this questionable high, intraday high, and also what we have now is this low that's questionable, the 4,500, and inventory is 100% short. Okay, 10 seconds before we see something else. 10 seconds before PPI. Okay, let's see what the market does. The odds are that this inventory is going to be challenge overnight inventory. I don't know what the number is, but what I want to see is what the market does with the number. Another spike to the upside. And the thing is, the market is giving us a gap now. Very thin, very shy spike here. I may have a bias here, okay, but that doesn't mean I'm going to do something regarding that right now at the moment. Okay? These kind of events, news events are really hard to trade. What I want to see is what the market does after the number is released. Okay. Overnight inventory remains there, remains 100% long here. Try to go to the upside. Momentum is to the upside. We'll see that. It is a 32, basically, almost. Okay. How much volume this market has? 230. Almost the same volume as so far. Almost the same volume as yesterday, before the spike, before the CPI. I have my doubts. This is not going to happen now. This period yesterday has almost 300, almost 100,000 contracts. The last one. I have my doubts that it's going to be the same thing today, because yesterday, when market has this spike, it has a lot of volume here. You know, a lot of stops that can trigger some movement to the upside. Now, what do you have today in the upper side? Okay, what is here? There's nothing here. Right? So there's not going to be volume here that can helps to trigger another spike to the upside. So the odds of having a, you know, well, now we can see that, right? Now we can see. It's easy to talk when has already happened, right? But the volume here, the stops that were here above this, above this, above this, above this, and above the 4,500, plus the lack of excess of this high, market closing really close to this non-excess high here. Market just got too long here, and now I think it's too long again. But momentum is a really powerful thing that we don't want to mess with. You want to know where the momentum is focused, what's the direction of momentum, and don't fight it. Okay. Now, notice this thing that market traders are focused again in the spike to the upside, but and the inventory is 100% long here. Notice this low here. Notice these lows here. Notice these lows here. 1, 2, 3, 4. 1, 2, 3, 4, 5 here. Not that you can say here also, but not as clear as down here, right? Still have 2 more periods. You have a really small spike to the upside here. Now this is a market high now. Market make a new high in the overnight session here. Market made a new high in the overnight session. This kind of highs don't tend to be a lasting one. Markets tend to come back to recheck those highs. I'm not saying it's going to happen today, but the odds that to be a permanent or a long-lasting one are low here. And one other thing, why I am flat in front of this kind of events is because the odds, right? If I have a position, any position, I have long, I have short, what can happen is three things, right? The market can go in the direction of my trade, the market can remain neutral to my trade, or the market can go against my trade or my position. So 2 out of 3, okay? 2 out of 3 are against me. 1 is in my favor and 2 are not. So what are the odds there? Less than 50%, right? I will be better if I just use a coin, flip a coin. So my odds are 33%, something like that. And so why do I want to have a position here in front of an event? Unless I am hedged, right? Unless if I am hedged, that's a different thing. Now, let's check the homework. Something very interesting from yesterday was that there was a lot of volume. There was a lot of volume yesterday, multiple times. You know, when the market was going to the upside, we were talking, okay, this could have some problems here. Because of the volume we had here, the volume we still have here, and the lack of 10,000s here, overall here, even though the market has really higher volume from the beginning. Okay, and the volume appears here. Well, the volume appears here. You know, when you have this liquidation to the downside, you know, you start seeing this kind of volume. This could be very well the end of the movement, the same way as this one can be. I'm not saying that I knew, but the odds were increasing here. And happening at the 4,400 is not unusual that if you have any trade here, I mean, it is too close now, but just imagine that could be a longer distance. It's not unusual in front of the reference. There's some cover, some profit taking here, and if the market keeps going to the downside in this case, you know, the market can, the same traders that took profits here can re-enter the market down below. But the market was coming from something very important, which is a breakout of the range. 2 ranges were breaking out, and also we have this gigantic gap to the upside. Remember, the odds of the gap is going to be filled right away. The first try are low. This could be, this could have been some form of long. I didn't do anything here, right? Nothing here. You know, this was one trade here, and then after this we have rotation. The rotation started here, right? Coming back to the downside, to the upside, really high volume here as well. A lot of volume here, you know, big blocks here, which increases the odds of this being you can say this a rotational market here. Another big volume block here, and more important to me at the closing. And what I see also is this red. See, the more the red, you know, the higher the congestion that you have here. You know, which I want to see a lot of blues here. Okay, which is what I have here. And when the market came up here, the market started just coming back and forth, which is this one here, congestion. This is actually a comparator here. What I'm doing here, I am comparing on the right side, the same here, the same way how I compare 50 contracts here versus 150 on the left side. The same thing I have here. I compare here elapsed time, which is the time the market stays around certain level, around any level, versus the, the amount of contracts that are traded, versus the contract per seconds that are traded. Okay. What I come out, when I come to the realization that I actually didn't care about the numbers, but just the color here. Right? In this case, for example, if the comparator here, the comparator that I have here, if I have more contracts in the right side than the left side, it will be colored. It will be colored blue. I mean, the opposite thing happens. It will color red. You know, I'm just what I'm comparing here. Time elapsed is the base of contrast per second. What I care is about this, about just the color. And what happened after the closing? I have big volume blocks here, really big volume. This could be two things, right? This could be absorption because the market was going to the upside here. Was going to the upside here, then a break, and then a balance here. This is an inside bar here, right? And there's some buying here. This could be absorbing. This could be absorbing the shorts here that are covering. Could be that. I'm not saying that's that, but it could be that. But what most often use this volume for is I use this volume as a sign that there's some potential here to the upside still, because there is interest in not letting this market, to create here. And I mark these areas here. What is this? The 11 and 12. Oh, come on. What happened here? When I use those, this is for the overnight. I got this one here and this one here, just as a reference. So there's a lot of volume in this area. You can see this here as well. Okay, but one thing is having this kind of volume without the big blocks. Okay, that kind of volume is for me is weaker. Is weaker. Now let's keep checking the homework. This is very erratic histograms. This is something when I notice this kind of histograms, this is very typical. Okay, we were talking about how yesterday was mostly short-term trading, right? When you have short-term trading, you have this kind of histograms. You will compare, you will see the quality of these charts when there is more serious money in the market. This is not, to me, this is not, which actually puts in risk, which actually makes me question the whole day that we have yesterday. Okay. It happened here as well. Something different as well yesterday. There was a continuation of the recovery in the bond market. Once the market reached this low, basically tagged this low, and there were some odds here. The odds were that the market was going to reach this high and then have a bounce here. The other possibility here, the other scenario is market breaking through this low. Okay? The market break through these lows here, this could drag the market. Look at what's happening with the dollar. The dollar is weakening here. Crude oil is recovering. This is a good sign, actually. Because it could mean that there is buying here, potential use. We are also getting into summer. Gold, this is interesting as well. Gold is recovering here. With all of these markets doing what is good for the stock market, this should be going to the downside. Okay, so one of these two is wrong. Both cannot be right here. Okay, high volume and high volume blocks after the closing, especially this one. Okay, especially this one, this big one here. At what levels? I got here. Alright. Oh, there was something in the 4510 to the downside. And these levels here, 11 and 12, between those two. Why I have this at 4110 to the downside? Oh, this one here. Okay, there was some liquidation there. Let's put that one, because I think that could still be in the market here. Some serious volume to the downside, regular trading hours here. Okay, this still can be here. You got the markets. Now, the high, the lack of excess, the non-excess in the monthly time frame has been corrected here. Upside continuation, century numbers. What I don't want is this market to come back inside this range. Coming back inside this range could actually target the opposite side of the range. And this is the breakout to the upside. Weekly, this is the third week we are having trend, upside trend, buying, mechanical buying, very technical buying here. Now, this is a nice bigger charts here. This one and these ones are very nice. The short one daily is kind of more uglier. It's not as fancy as these ones. It's not as fancy as these ones. And the breakout in all these time frames is happening, and this is what makes you take the long yesterday at the opening. Okay, the odds, right? When all these time frames were in sync, when you start doing your homework, start checking the monthly, weekly, and daily, and intraday as well, you will see that not, having the market in sync, all time frames being in sync, it doesn't happen all the time. It's not that often, actually. Sometimes you will have market going to the upside, another one could be going to the downside, and the other one could be trading in range. Okay, so the odds are better when we have this kind of sync. Okay, we have a market in sync, all time frames are in sync, and with the potential of having a breakout range. Now, the monthly market can fall back all the way down to here and still be to the upside. All the way up down to here, still be to the upside, but now with a risk to the downside, right? If it's above this, it still is going to be to the upside. But what can be different is the weekly and the daily. Those things can change. This could become a downside market, and this could be a trending market. Now, why I'm telling that is because if this market comes back inside this range, I have to monitor now that this market have an upside continue. I don't want this market to come back inside the range, because the risk to having a rebalancing is going to be increased, right? It's going to be, we're going to see increases of risk. Monthly, century numbers on the upper side, can no excess here, Before the market did this, there was no excess here on the lower side. One time frame higher in the weekly as well, very technical, very nice chart here. Look at the lack of excess here, no excess here, questionable here, And the same thing here as well, but it's very low, right? You look at how you can see the lows here very close to each other. 1, 2, 3, 4, 5, 6, 7 lows very close to each other, way down here. Okay. Okay. I don't want this market to come back inside here, okay? Because it could target this 43.50 down here. Now, one thing is something I don't want. And look at this market here, okay? This is the breakout. Why this? Why this? I'm taking this is 43.50 here, but the breakout level is 43.30 here, and these levels, okay? And notice how far are from the how far is the market from the moving averages here, and the gaps here. 1, 2, 3, 4 gaps in the market. Multiple gaps here, multiple lows in the intraday. Look at this: 1, 2, 3, 4, 5, 6. 1, 2, 3. I mean, it is very questionable. To me, this market remains very questionable here. Okay, the same thing that they have here in the upper side: 1, 2, 3, 4, 5 highs here together that now the market has taken. A little bit, it's not that obvious, but you can see the same thing in the lower side here. 1, 2, 3, 4 together down here, and this was very weak inventory here, and we saw that, right, coming from holiday, from the 4th of July holiday. Okay, there's going to be more volume down here. It's very long again. Market inventory is long again. With the gap here, it market put another gaps here. The overnight, another indicator, another sign, positive sign yesterday for the long was the market was coming from a spike. We have a spike to the upside previous day, another spike in the overnight, got plus a ginormous, really big gap here to the upside. 4,500, the breakout, clean breakout here, a lot of stops here. I want to see is volume here, market having volume, so this movement can keep going to the upside. Market has high volume. It doesn't POC is not as wide up here as is down here. Alright? Or this one, for example. This is classic short covering that you have here. This, you want to see an example of short covering? This is it. Okay? And the market closes at the center actually. And short covering weakens the market. This is short covering. This is not. The intraday also shows, the market profile shows the way how this market is doing. This low is very questionable coming from this high, right? From 4,500. You can call it 4,500 or this high. This low here coming from value area high. This low here coming from value area low here. This low here coming from a halfback and non-excess here, and the 4,500. Very technical, very mechanical trading going on here. Not a sign of a powerful movement. Okay. Now, summer markets are the thin markets as well. Thin markets can lead to some serious momentum to either side. Right? It happens that most often is to the upside. When one example of thin markets is what was it? It was I guess it was this day, right? I don't 1, 2, 3, 4. Yes, it was Friday. Really thin market from the beginning. Okay, and you got this gigantic momentum to the upside and a very short time frame, and all of this trade was liquidated the very same day. Okay, very same day. Let's go back to the homework. Market profile. Market's out of balance now. Market's not in balance. Market's out of balance. It's doing a breakout, breaking outside the balance, breaking the 4-day range, and also breaking outside and breaking out of 20-day range as well. There's a significant gap to the upside, and multiple gaps in the lower side. Now the overnight is 100% long. All this overnight inventory is long. Traders are very excited now. The market is going to the side. The market has taken the 4,500. Next stop 4,600. Okay, we are going to the moon now. The economy is good, no recession, numbers are beautiful, and everything is just as good as it can be, right? Cannot be better. The odds of being better are spectacularly high. Be aware, be careful when you start thinking that way, because markets or what we do with markets, right? What we deal is mostly with inventory being rebalanced all the time. All the time. Short time frame trading, which is what I do, I suspect you do as well, is, has a lot to do with these inventories, with long inventory, super long inventory here, getting rebalanced. One popular trade, very popular trade is the break, the rebalancing of overnight inventory. Okay. Notice something here. Remember what happened yesterday. This day here, we have a gap to the upside. To the downside was filled. Nothing serious to the upside. The next day we have a gap to the upside was filled as well. There's nothing here in this market. Just trading money here. Trading money in here. Alright, if you have any questions, please just let me know anytime, any comments. I will be more than pleased to have a conversation. Trading can be a lonely business. Now there's something out there that is called a sequential trade. The market could do that. We have this 3 wide high here, very mechanical way of selling, and another way of selling, plus the hardback here, and very mechanical down here as well. Okay? Very mechanical, exactly from the 50. This could be of relevance today. All right. This could be very relevant today or the upcoming days. Okay, at this moment I am going to take a break. I'm going to do myself something to eat. I'll come back before the opening, if not early. Alright, see you. Hey, I'm back. I'm still, I'm still in front of. I still haven't eaten my breakfast. I just wanna show you something that I noticed here. Um, this market is very elongated to the upside. Okay, this is a breakout. Remember, this is a breakout we're having from multiple time frames, monthly, weekly, and daily as well. What's happening right now? And notice the amount of volume we have here. Big blocks here. Big blocks here happening right. Oh, come on. Happening right above yesterday's high. This is the high. And notice the huge blocks that we have here. And I mean, the market is nothing is happening. Okay, nothing is happening in the market right now. But this is just curious here. This could be a nuance here, meaning that if the market, okay, come on. Where is gray here? Oh, meaning, this could be a very questionable area to me. This one here. I would pay a special attention to what the market does around this area. The spike has really low volume, but the current period has even lower volume, okay? Has even lower volume, but is building value above this area, just above yesterday's high. And what is that? Oh God, maybe some interest in keeping the market high. Why? I don't know. Market has a tiny gap here. Now, my focus here is the monthly high down here. This is the overnight spike we had yesterday. And this, the spike to the upside before yesterday down here. Okay. The momentum to the upside remains here, but to me it's kind of, this high is questionable and this low is super questionable as well. Alright? Nothing going on right now. Nothing happened on PPI at 8:30. Let's see what happens in moment. I'm going to finish my breakfast and come back soon. All right, all right, all right. The market is now 3 minutes away from the opening. For good, remember I'd say that there was something here. I didn't realize this actually was the higher volume I have here. Was actually this period. I thought was a current period. It was this period here, and it was in front of news release. This could be adjustments, hedging, profits taking, whatever happening here. Now we're having some kind of like high volume here. Notice this 300, and just before the opening. It's just interesting to say the least. Very curious here. Now, we have a really tiny spike here. Spike to the upside. Like it's going to opening inside the spike. But look at where this is coming from. Half back here. Overnight inventory is 100% short. I will pay a special attention now, special attention to the overnight inventory and the gap. The market has gap to the upside, following a really ginormous gap from yesterday. You know, markets gapping in the way how the market is doing these gaps now. It's just a sign, you know, right? It's another sign here. You know, it's very emotional market. I think the market is getting ahead of itself now. You know, this could be a breakout, but it is just getting ahead of itself. You know, you have a gap here and another gap today. Come on, man. Just come on. Let me check now we are few moments from the opening. Few seconds from the opening. All right, market is open. Let's see what the market does with the gap. Is the gap going to be closed? Because traders are selling, traders are buying from yesterday's high. This 3Y high now is history. Has been repaired. What remains in the lower side is this 4,500 down here. %100% overnight inventory here. Gap has been closed. This could be a trade to the downside. This could be a counter action to overnight inventory. High is questionable here. Very questionable here. Value is higher. Gap has been closed. Questionable high up here. there could be a burst to the upside. These longs, I mean these shorts here could be squeezed if there's some rebalancing here. Yeah, the first thing when the market closes the gap, is I want to see the market comes down here. Volume remains higher. Higher volume here in this area here. There's no attempt to counteraction the overnight inventory. Just the gap was closed. If you got a short here, when the market closes this gap, this is telling, okay, let's see, right? The market make an attempt to counteraction this overnight inventory. Okay, nothing happens. The most important thing, the gap has been closed. Remember, the market's to the upside, but questionable. I want to see volume now. Did you see how the market rejected the counteraction to overnight inventory? Super long. 100% long inventory here. Market just didn't care. But the most important thing right now is the market closes. Once the market closes this gap here, market open, even though it was small, right? I will start monitoring value. What is value now? Okay, want to see where is value? What's happening with value? Value is higher, right? Value is higher. Yesterday's value is down here. Now it's higher. Why you want to be short in this market? Okay, why you want to be short? There's a lot of buying that happened yesterday here after the close. Buying or selling, I don't know what it is. Okay, but there was some buying here at 4,500. The market is coming from a breakout, multiple breakout here, multiple breakout markets in sync to the upside. Questionable? Yes, it can be questionable, but it's still going to the upside, right? Notice how the market here, check this out. Check this out here. Market open with a gap, market closed. Remember the volume that we have here also as well. Now I can see that, right? Market closed the gap, but just dries here. Really fast, but dries here. Just dries. And value is higher. Okay, value is higher. Let's now start monitoring value. The high concentration on volume from the overnight from yesterday was this area here. This area here. No, from yesterday, this area high volume here. This area questionable as well. But who cares? The market is going higher right now. Start monitoring here now. Notice where volume is being. It dries here. We start building value, volume up here. I want to see the market keeps going higher. It needs to have volume here, new volume here. To be of relevance. I don't want the market to come back inside this range again. Did you see how fast this was? And traders can be short in the market. Why? Just because the market is too high, right? That's not enough reason to go for a short. Market's open, just open here. It's continuous, you know. It is continuous to do what the market is, what is doing here, you know. That's why you do your homework. We have a breakout to the upside, breakout to the upside, breakout to the upside. One time frame higher, 1, 2, 3, 4 times. 4 days in a row going to the upside, 1, 2, 3 weeks in a row going to the upside, 1, 2, 3, 4 months going to the upside. Everything's positive in this moment. Everything's positive here. So you want to be short, just state your reasons to be short. Be ready to adapt. Okay? The first thing is, you know, there's nothing here for the shorts. There was nothing to the shorts for the shorts. One important thing was the gap being closed. Very emotional thing. Another gap, right? The gap has been closed. Let's monitor value here now. Ten minutes. Seems like this day is going to be as high as yesterday, not higher than yesterday, but could come up to here. Now the shorts here, the shorts here could be just waiting, right? Waiting, okay, the market is going to come back here, come back here. These shorts here could be the fuel. You know, if the market comes down to here, can actually cover here. You know, right now I'm barely, way underwater now. Okay, shorting here, getting inside here. You're way underwater here. If the market comes back here, down to here, to this level, this could be an opportunity for these shorts to get out of the market. If the market even gives them the opportunity to cover. Otherwise, if the market keeps going higher, this could be the fuel for this market to keep going higher. Did you see the movement to the downside? It was quite convincing, right? Boom, stop it, boom, reverse it right away, close the gap and boom, to the upside. The volume dry here. If you are short here, you got everything against you. All the odds are against you. I'm not saying the market cannot come down to the opposite side of this range. Okay, but right now the odds are against you. You're playing against the odds if you're short here. Now the upside movement is stalling, but it's building value here. The most important thing, value. Values to the upside. It's kind of struggling. Oh, look at this volume here. Look at the 8,000 here. Hmm. Let's see if this becomes 10. Tomorrow we have, banks start reporting tomorrow. And next week we have this more earnings season starts. This is official kick. Not an official kickoff of earnings season. I don't know who reports next week. Maybe more banks, right? This week we have. Tomorrow we have Citibank, Wells Fargo, BlackRock, JP Morgan. Oh, JP Morgan as well. I didn't see this. No. Most major banks. Bank of America maybe somewhere next week. Lower prices were rejected here. But the kind of same. This is something that we need to learn, to identify, right? To become familiar with, which is the movement, the kind of movement that this market has when it opened. It opened and then it went to the downside, and lower prices were rejected right away. That kind of rejection happens in both sides. There's acceptance here so far in the upper side. Market that didn't even come back. Oh, come on, what happened here? My bad. Let's put it. They never even come back to inside overnight area, overnight profile. Once it took this high, it never came back. Did you notice that? Okay. It remains upside. It's building value up here. It's a little bit of congestion here. Not that much. I will start worrying this becomes super red here. I think now it's having value here. Volume. It's building volume here. What makes this questionable is that the gap was closed. Okay? Gap was closed. Then after the gap's closed, you start monitoring for monitoring value. Because what the closing the gap does is puts this low, actually, put this low inside, which would be the 4,500, which could be the monthly breakout or weekly and daily breakout level here. Or any of these three could be the potential destination once the market closes the gap and gets back inside this range. I don't want the market to come back inside. If I have a long here, I don't want the market to come back inside this range. If the market comes back inside this range, that's okay. That's a no-no. Now the market telling me, you're wrong. Okay. A little bit more than 15 minutes, a little bit more than half of the period has passed by. Volume is high, more than half than yesterday. There could be the same as yesterday. If this is the same as yesterday or higher, okay. Oh boy. You can call this, when you are technical trading or you trade these shapes or whatever, you call this well, in this case, it's a bear trap or bull trap or whatever, right? But you don't know what it is just after the fact, okay? Just after the fact. There's some selling here that happened. You see how the market was pushed to the downside, but didn't even get to overnight high. Okay, the first thing the market to the downside, first sign this market is too emotional was closing the gap. Okay, but I need to monitoring for continuation here. What is monitoring for continuation here? Okay, market needs to come back. First thing, market is against me. For example, if I am short, right? Why are we short? Right? You are starting to see, to analyze what's happening. Are you having continuation? No, market has rejected lower prices. If you are short up here, the market needs to come back inside this range first, then inside this range, and settle is way down here. This is 100% long inventory. The market didn't care about that, at least no now. Okay, but they also having a rotational market today again are still, I think are there. And the first sign is that market closing the gap. Okay. Still, it's an upside market. I need to monitor for continuation here. I don't want the market to come back inside this range. The market defend this. Don't want the market come back inside here. If the market comes back inside here, the next time that can be bought is half back here. You have the opening here and previous day high, right? It's getting a little bit congested here. You have some volume though here. We got pretty close to 10,000 here. The longs could have a stop. I don't know. Maybe the long could have a stop out in here, right? This could be your stop, or it might get too close to. This is a positive market here. Okay, there's some things there. Now I want to see what the market does with these things here, because this could be the base of something here. Okay, this could be the base of something. This is very. Notice that there is no big blocks here. This could be the base of a rally here, or could be the high of a break. Okay. You're going higher. You don't want the market to come back below this level now. Now let's move. Let's move the stops maybe here now. All below. You don't want. This is a lot of congestion here. You don't want this. There's some risk here. If the market goes below this area, this could be some liquidation here. You don't want that to happen. I remember the gap was close. Market coming back below this now. Actually, I guess it's too close. This. Yeah, but the risk is increasing now. The risk has increased. Oh, look at that. More things here. We can have some serious... Something that's going to happen here. Something relevant can happen here. Another thing is there. Oh, okay, look at that. Look at this. Huh. Now this is going to be, okay, I guess it stops is fine here. This is going to be the next thing I'm going to monitor, either to the upside or to the upside. If the market goes to the upside, this is going to be resistance. This area here in the very short time frame. I guess the stops are here. This is becoming risky now. I don't want the market to come back inside here because now, why I don't want it to come below? Why I move it up here? Because if it goes now, it goes below here. There is some serious volume here now that can be liquidated. Okay, that can be liquidated. The movement to the downside can be significant now. The upside as well. You know, there is some volume accumulation here. This is going to be another 10 here. And somebody has to be wrong here. Okay? You got the longs, you got shorts here. Accumulation of those two things. Okay? The odds favor the upside. In the longer time frame. The shortest time frame, what makes me question the movement is the market closing the gap. Okay, but the positive thing is the lower prices were rejected here, and whatever happened after this could have some significant movement. Look at the accumulation of volume here. All right, now I expect a spike here. Keep going higher. I want to keep volume. I want to see more volume here going to the upside. I don't want the market to dry like this if it's going to the upside. Value is higher. And this is now stops are here. Now having the stops down here is too risky now. Just up here. This is fine. 5 minutes. Oh boy, this volume is going to be lower. Okay. So be careful now. Volume is not going to be higher than yesterday. No taper on the upper side. Markets to the upside. But it's becoming risky. Okay, this area here is support. Okay, we are going to have another 10 here. I don't want the market to come below this area here. Below this line here. This level here. Okay, that's good. It's very questionable. It's becoming risky here now. Let's see how it dries here. But it's not having down, there's no selling so far. Remember, somebody has to be wrong here. Okay, somebody has to be wrong. Either the longs or the shorts. Which ones? I don't know. Remember the kind of movement that they try to the kind of movement that we have today to the downside. That's something that you need to have it in your you have to internalize that kind of things. The market is defending this area here. Somebody has to be wrong. Somebody has to be wrong here. Either the longs or the shorts here. Can we have a trending market? Maybe. Especially in expectation of earnings that we have next week. Earnings session is coming. CPI was good number. Employment employment is dropping. Unemployment is rising. So everything is good, right? The Fed is, whatever the Fed is doing is working. Right. There's nothing that's going to stop this market now. We're going to the moon. Two minutes to the next period. Notice how volume is lower. Okay, it is going to be lower. It's just there is no selling here. Oh boy. Look at what, did you see what the market did here? He just stopped here like for 5 seconds, something like that, right? That's a sign, okay? That's a sign that the long is getting riskier and riskier. Yeah, I'm not saying the market is not going to rally here. It's cannot go all the way up to here, for example, right? Or to the 50. But it's getting riskier now. Okay, so it is fine here. It stops being here. When you move your stop from here to up here, that's good. Okay, that was a good decision. You never know, right? You never know that you're going to be just after the fact you can analyze. And look at the amount of volume here. This is really high volume here. 13. It has been a while since I've seen this kind of volume here. Really high volume. No big blocks here. The market is holding this level here. If the market gets too close to this high, that's good. Also, market is going higher. Notice where this is stopping, right at the center of this area here. There's a good also upside, having upside continuation here. The volume is lower though. Okay? The higher it goes, the riskier is becoming. I don't want the market coming through this level. This is support now. This area is support here. There's a lot of volume here. B coming close to A high increases the odds of upside continuation. Closing the gap here, increases the odds of having a rotational market, or or having a significant pullback to the downside. What you need to do is monitoring for continuation here. What's happening? This is a very narrow range here. Still, the trade continues from this from this period here. So why you want to be short in the market that is to the upside? Okay. It's a risk here. Okay. Now again, it's been bought from this level. The low has been taken. But notice how there's no downside continuation here. It didn't hit the stops yet. There's volume, no taper on the upper side, volume dries when it comes to the downside. This could be a virulent movement here. Market can have a really big spike. It's a fast movement to the upside, or a kind of quick liquidation here. Very narrow range here. Remember, somebody has to be wrong here. Somebody has to be wrong. Both cannot be right here. I guess this is an out now. Still right there, goddamn. Still long here. Still long here. You know, but you need to get out of the market by your own means here. Okay, don't let the market stop you. The risk has increased here. It's very high now. Okay, the risk of holding along is very high. If you got the profits, could be a time to take some profits, to hedge your positions, to trim your positions here. If you have more than one, having only one is kind of hard, right? You just have to move your stops, and not to kind of like to lock some gains here. You know, it's kind of risky now. It is kind of risky now. Hmm? There is now just nothing here. Somebody has to be wrong here. Somebody has to be wrong. I will seriously question if this if this is the full extension of today's range. Okay, we very well can have the lows or the highs of today's. Okay, and all of that because of this volume. Somebody has to be wrong here. Somebody has to be wrong here. There's a breakout of yesterday. The breakout of yesterday's high is very different than the breakout that happened yesterday. Okay, yesterday was a breakout in the multiple time frames, monthly, weekly, and daily. Now we are having just upside continuation. There's no breakout, no nothing here. Again, the market is buying from this exactly, where the stops are supposed. But when you move to your stop, right? We move the stops higher here. Still there, okay, still there. Okay, that's an out now. That's out. I think it's too risky now. This is out. There's nothing here now. But let's keep it here for the sake, right? What it was what was the area? I guess it was this. Oh, I guess it was this, right? That's an out now. Still, still an upside day. The next thing to monitor to the downside. Notice how it's drying here. Notice how this is drying here. You don't want the market. Remember when we were talking, we don't want the market to come back inside overnight profile, because it puts this hardback. There could be some buying here coming from hardback, which is very questionable, by the way. Questionable buying here. Some of these shorts here are being forced to, some of the longs are being forced to liquidate. Market has come back inside the overnight range. There's some volume here, accumulation. You don't want to see reds on the lower side. You want to see the same thing that happened here, like, ooh, nice, nice drying here. Notice where the buying is coming from. Buying is coming from hardback. It's, your trade, if you're long here, more and more market is questioning the long here. So this movement just stop me out. This movement here. Okay. Has become very risky now. Now, notice how the market is below this area, okay? Notice how the market is below this volume here. Is the market going to come back inside here? If the market comes back inside here or above this area that we have here, that could be a good sign actually for the longs. Because some of the weak inventory here, some of the weak longs have been removed. Very questionable, very questionable. The same way how the market traded yesterday is the same way how the market is trading today. Notice how this is held back right here and was bought. I guess we talk about how some buying is expected that appear around this level here, around held back. It just happened. It tells me who is doing the trade. So this market can have upside extension now, but the longs that are there are not particularly the stronger ones. Okay, now the odds have changed to the upside, but it is weaker now, weaker than the ones that we had from the opening. Market has tested above this area, traded above, traded below. Accumulation, more volume being accumulated in this area. Somebody has to be wrong here, right? Somebody has to be wrong here. What I'm going to do here is I'm going to want to do something here. I guess there could be a spike here. Yeah, there could be a spike here at this moment here. That would be, let's say 43 maybe. And the stops going to be very short here. That's how the market is trading around this area. Okay, when the breakout, when the resolution of these areas, I think is going to be very dynamic here. The odds are good. That's going to have a very dynamic resolution here. And that is going to be, could be here, 32.75. Notice the volume here, this area here. Okay. The high, we have excess in the high. We have excess. 2 ticks is good excess, technically. The expectation of volume is here. I guess we're going to have about the same thing. It's very questionable, your loans, right? You know, this was the stop here, just below this area here. Stops were here. Now this period is questionable. This low is questionable. Repairing this weak low here will put the market too close to opening. Repairing this one can put the market somewhere in here, which is kind of like actually closer to yesterday's high. You know, and the farther the market gets from this level, the higher the odds that this volume is going to be liquidated. Okay. Right now we have accumulation there. We have traders that think this is an upside market, traders that think that this is a downside market. You know, both cannot be right. Somebody has to be wrong. Somebody has to be wrong. Did the market come back to where here? I don't know. Was it bought from this high here? No. This high is better than the low, but both are kind of questionable, right? They are just too close to each. The high is too close. B high is too close to A high. B low is too close to A high back. Very mechanical trading here. Very mechanical trading here. Volume, I mean, the market is building value above yesterday's high. There's acceptance of higher prices here. The market explored above, the market explored below. It didn't find sellers here. Now, again, let's go check the upper side. Notice how this congestion area remains the same. The resolution that this is going to be, I think, the odds that it's going to be very dynamic are increasing here. What I mean with that, you know, the odds of being a sharp movement, either to the upside or to the downside, either to the upside, out, away from this level, is going to be very sharp here or here. Which way? I don't know. Nobody knows that. You just take yours. You know, we saw this market closing this. Again, it's being bought from hardback. This is another time it's being bought from hardback. Whatever happened to the upside now is going to be very questionable. Look at how it dries when it reaches this low. It came down exactly to be low. It was bought again from below. It was bought again from below. Markets traders are buying the dips here, which is the strategy actually, right? Which is the strategy when you have value area high, when you have a market going to the outside. This is the strategy. You buy the dips, okay? You wanna buy a dip here. The market, the longer the market trades in this area, the longer the market trades in the area, the more the value is going to be here. The long is kind of risky now. You know, the long side becomes weaker and weaker now. Since we have earnings next week, you know, the market is very elongated to the upside. It won't be. It's not crazy to think the market can be, you know, when tech start reporting, the market can be way up here, right? And then we can have some fun rebalancing here, rebalancing of inventory. The odds that that's happening here are I think are lower, okay? Or another thing that can happen, the other scenario is, you know, this could be, the market could be too high now. It is too high. But there could be some rebalancing here. The market can break again, come back inside this range, and face, you know, and wait for earnings in this area. And then the market can rally back to the upside. All those things you have to use imagination here. Now, this is the third time, okay? This is the third time the market is bought from halfback. It didn't find volume here. 3 times the market has tried to take this halfback here. It couldn't. Now the odds to the upside actually increases here. If the market comes back above this area, you know, have this area, this concentration volume from the first period, the market comes back in here, now have better odds of taking a high. Volume is increasing though. You know, we have 2/3. I mean, this one, if this keeps, this is the expectation, but I think it could be actually up here. We could have some increase of volume here. Boy, that's just a mechanical high. Now, something that can happen here is, I have seen this many times also. There's a lot of stops here now. Market can just have a break, boom, so like the same kind of movement to the downside that we have here. It can have the same thing, and do not. I don't want, you know. Now, it just happened. No, it just happened. You have it has a kind of like a downside movement really fast. It was bought from here. It's still weak. It would have been better maybe in this area, and then from there, there's another rejection, the same kind of rejection we see here, like another rejection, and then keep that's something that can happen. Okay, if the market comes back after this low has been repaired, okay, after this the market comes back up to here, that is going to be something to the upside. No, now remember, the furthest we go from this area, the increases the odds the market is going to trade in the direction of that thing. Market hasn't taken this low, this high from yesterday. Up we go now. Now these lows, these traders that were buying here are now out. Okay, they're now out. Okay, let's test the high now. Ooh, all right. Now we are going to check the highs again. Monitoring for continuation. We have, hard back of the period. And most importantly, this area here. This area is super important now. Now the market has better odds of trading to the upside if this area is taking. The market comes back up here, the good odds can keep going high. The weak lows have been removed from this market. They were here, this market was where it was. Yeah, it was here actually, right? The market was bought 3 or 4 times from half back. Now those ones are out, and now we can go to the upside. We are long somewhere in here. This is my stop here. I don't want, the closer it gets to this yesterday's high, this is my stop here. No, it won't be here now. It won't be here because the odds, if the market comes back inside this range, the odds of this low is being taken with the spike to the downside are high actually. Now I want to see the next thing. I want to see direction move. I don't want this market to come back now, much less open close to below. This area here, oh, look at that. This area, remember from the overnight, this area was high blocks here. Just curious how this market stopped right there. This could be coincidence. Notice how the market now is being sold from B hard back. Okay? This favors the upside actually. Now the stops were here in A hard back. There were stops here. Now the stops are being placed above this hard back here. Very technical trading here. Very short time frame trading here. Very short time frame trading. There's nothing here now. This market has nothing here. There's nothing here. The risk now in this market is high for both. No, I don't like this market now. It has just a stall here above yesterday's high. Can the market build value here? Can this be a very wide POC here? Can it be? I don't like this market now. There's a lot of congestion here. This attempt to extend the range of B of this period is coming from hard back. Okay, that gives you an idea of who is doing the selling here. This market is still to the upside. Okay? Upside here. Notice how settle is way down here. This is, everybody's seeing this market as green. Everybody has a computer. Okay, we'll have green here. This market is to the upside. The momentum indexes are to the upside. All of them are to the upside. Check your MACD, your RSI, or whatever. All of them are green now. everybody's buying here now. Okay, it is a risky proposition to be short. Okay, but you just have to wait your opportunity here. What's that? Why would like to be short? Value is higher, right? But the first things that the upside movement is facing, is having some issues, is the market has closed the gap here, for example, right? Market has closed the gap, volume is decreasing, volume, there's a second sign, volume is decreasing, market is stalling here. Right? Those are signs. If you are long, okay, just be careful, hedge your position, start trimming, do something, okay? Do something there. Momentum remains to the upside. There's no selling here. The market has not, this time, the first period re-entered previous trading range. The second period re-enters the overnight trading range. Okay? Those are not good signs for longs. Doesn't mean I'm going to go short. You even have, if I want to be short here, I mean, the potential destination of short could be, could actually be the 4,500 here, okay? Because there's a double low here on the opposite side from yesterday. This is a weak reference, weak buying that happened here at this level with this. I'm going to mark this as right there, okay? So I can see, so don't forget, because tomorrow I may forget this. Look at this, exactly from 4,500 here. Right from, and from previous, oh, okay, this is not good now. And right from G low as well. Notice where it's coming from. No good here, no good up here, okay? So if there's a break from here, this high is going to be very questionable. Now has been repaired. Now it's a better one. Notice where the longs are buying this market. Can you see where they are buying? B is an inside bar. C is at the low range. Okay, C is at the low range. And notice where they are buying as close as possible to B low here. That low is questionable. And if that low is repaired, it actually starts one time frame lower. Okay, but notice this thing. Okay, the market is to the upside. Okay, the market is to the upside. Value is higher. The trade that's going on is buying the dips. Okay, when you have a trending market to the upside, what you do is you buy the dips and sell the rallies. When you have a market to the downside, is you sell the rallies and take profits on the breaks. This market is buy the dips and take profits in the rallies. This is when you take profits here, up here. This is when you don't go short up here, you take profits here because it's an upside market. What is the quality of the market? Okay, the quality, the health. What kind of market is this? Okay, we have an upside market. Is this a strong market? Is this a confident market? What kind of market it is? You have to evaluate those things as well. Notice that once this low was bought, you stop it right here. That's close possible. I'm not saying I do this kind of trades, right? But the trades do. They just put the stop one tick below this low, one tick, two ticks below the low, and that's it. That's it. That's a stop. Okay. What the heck is this 29.5? This is low, this range, right? Let's name this. This 25.50, 43.50, 1 point. 29.50, 33.50. This is this range. This high value, high volume here. You know, there is acceptance here above yesterday's range. This 3 wide now. 1, 2, 3 wide. There's acceptance of this. This could be now very well be the beginning of something to the upside. First the market needs to take this range, this high volume out. The weak longs were taken out here. Now there's shorts here. Remember, somebody has to be wrong here. Okay, this range is being traded through. Oh, notice how this volume was lower actually. Okay, good. Also, this is going to be a high now. These highs are going to be taken with a spike to the upside. All right, it is 10:40. I didn't realize that. If you have any questions, please let me know in the comments. Otherwise, I'm going to call it a day. I wish you a good rest of the day. See you tomorrow. Okay? Alright guys, see you. Have a wonderful rest of the trading day. Stay safe. Bye bye.